Is a recession the worst-case scenario for the economy? Not according to Charlie Munger. In fact, he warns that what lies ahead could be even more dire. In this video, we'll delve into Munger's grim outlook on the future and its implications for businesses and individuals. Whether you're an investor looking to protect your assets or a worker trying to secure your future, this is a must-watch video that will give you valuable insights on the challenges we all face in the years to come. Charlie Munger, a great investor, recently participated in an exclusive conversation with Andy Serwer, the editor-in-chief of Yahoo Finance, in which he offered his thoughts on the high risk posed by growing inflation in the United States. Munger remarked, "Inflation is a really important matter. You might say that it is the way democracies die." He backed up his statement with many instances, ranging from the Roman Republic to Adolf Hitler to South America. He makes the observation that it was only after a period of years of inflation that finally the entire damn Roman Empire crumbled. So the present condition is the worst long-range risk we face, other than from nuclear war. According to the most current statistics from the Consumer Price Index, or CPI, released by the Bureau of Labor Statistics, the pace of inflation in the United States accelerated in January at its fastest rate in 40 years, with prices increasing across the board for a diverse array of products and services. The 7.5% yearly rise in January was a spike from the 7.0% year-over-year increase that was noted in December's statistic. The strong demand and ongoing shortages caused by supply chain disruptions were the primary drivers of this increase. The age-old Munger now holds the position of vice chairman at Berkshire Hathaway. Warren Buffett, a renowned investor who is also the chairman and chief executive officer of the corporation, has long been at the helm of the business, which has its headquarters in Omaha, Nebraska. During the annual meeting of Berkshire Hathaway in 2021, Greg Abel was designated to take over for Buffett as CEO of the company when Buffett retires. During the annual meeting of the Daily Journal Corporation, which is Munger's publishing and technology company, he elaborated on his comments regarding inflation. He noted that he was unsure of how everything would work out in the context of the United States, but that we're flirting with serious trouble. He brought up more historical examples, such as Greek city-states and Japan, saying that the Asian nation is another example of a nation that was severely hampered by mismanaging inflation, but is now still existing as a civilized nation. He cited Japan as an example of a nation that is still existing as a civilized nation. Throughout the course of the debate, Munger offered some mild criticism of the response that the United States government had given to rising inflation. He did this by referring to a response to the epidemic that was greater than it's ever been before in the history of the United States. The head of the Congressional Budget Office in the United States and other economic experts have remarked that the injection of cash into the market by both Congress and the Federal Reserve certainly rescued the economy, while at the same time contributing to the present high prices. In addition to difficulties like bottlenecks in the supply chain and pent-up demand, the expenditure is a consideration to consider. Some on the left contend that businesses are taking advantage of the current climate to engage in price gouging and push up prices even more. In hindsight, Munger believes that the government perhaps overdid it a bit. They poured so much money so quickly that it is difficult for the restaurants to obtain employees to perform the job. It seems that Munger was echoing the fears of some people who believe that the variety of government help, such as the recently terminated extended child tax credit or a suspension on student loans, has prompted some people to argue that employees may be reluctant to return to the labor force. "But I don't critique it," Munger stated in reference to the reaction given by the government. "I don't criticize it. It is difficult to make these judgments when you are under a time crunch." It is absolutely evident to Munger that inflation will not abate in the decades that lie ahead, and he issued the following piece of advice to anybody who is considering investing their money in currency for the long term. "I believe that the most prudent assumption that an investor can make is that during the next 100 years, the value of the currency will be zero," he remarked. "That is the theory I am now working with." Despite the fact that the stock market is off to a solid start in 2023, inflation remains high and worries of a recession persist. On the other side, Charlie Munger, Warren Buffett's right-hand man, believes that we need to be more satisfied with the way things are currently going. At the beginning of this year, Munger was quoted as saying that people are less thrilled with the condition of circumstances than they were when things were a lot rougher. "It's strange for someone my age, since I was in the midst of the Great Depression when the difficulty was unimaginable," she said. Munger is perhaps most recognized for his roles as vice chairman of Berkshire Hathaway and as a longtime business colleague of Buffett. In addition to these roles, Munger also serves as the chairman of Daily Journal, a newspaper publisher that has its own sizable stock portfolio. Why not borrow some of Munger's investment selections as well if you are expecting that some of his brutal reality may rub off on you this year? If an investing veteran of 99 years can be content with these three equities, there's a good chance they'll work for you as well. First one is the Bank of America. By the end of September 2022, Daily Journal owned 2.3 million shares of Bank of America, which were valued roughly $69.46 million at the time of their acquisition. Since it comprises 42.49% of the portfolio, the financial institution is Munger's company's most significantly publicly listed stake. Given the economic upheaval that is anticipated for this year, Munger is making a wise investment by sticking onto it. While many industries are concerned about higher interest rates, the banking industry welcomes them. This is because banks lend money at interest rates that are greater than the rates at which they borrow money, and then they keep the difference. The spread of a bank's profits becomes wider whenever there's a rise in the interest rate. It just so happens that Bank of America has been gradually increasing the amount of money it gives back to its shareholders. After the business's dividend rise of 17% in July 2021, Bank of America increased its quarterly dividend by 5% to 22 cents per share last summer. This comes after the company increased its dividend by 17% in July 2021. The yearly yield offered by the bank is 2.5% when calculated using the current share price. Bank of America is Berkshire Hathaway's second largest stake. Thus, it is safe to assume that Warren Buffett has a favorable opinion of the corporation. Second investing opportunity is Wells Fargo. Another dominant force in the United States financial services sector is represented by Wells Fargo, WFC on the New York Stock Exchange, which has assets valued at close to $1.9 trillion. It provides service to more than 10% of the nation's small companies and 1 in every 3 homes in the United States. As of the 30th of September in 2022, the Daily Journal held 1.59 million shares in Wells Fargo, making it the company's second largest public holding with a weight of 39.16%. According to the most recent financial report released by the corporation, Wells Fargo brought in $19.6 billion in sales during the fourth quarter. Over the period covered by the report, earnings came in at 67 cents per share. The management is keeping an eye on the impact that increased interest rates might have on the company's consumers. The chief executive officer of Wells Fargo, Charlie Scharf, said in a statement that our clients have been resilient, noting that deposit balances, consumer spending, and credit quality are all still better than they were before the epidemic. As we look into the future, we are closely monitoring the effect that increased rates will have on our clients, and we anticipate that deposit balances and credit quality will continue to move closer to where they were before the epidemic. The dividend payout for Wells Fargo is 30 cents per share and is paid out on a quarterly basis. This results in an annual yield of 2.6%. Lastly, we have Alibaba Group. These days, Chinese technology equities are not precisely the market darlings that they once were. For example, the e-commerce behemoth Alibaba Group had its share price fall by 26% in 2022 and is down by more than 40% over the course of the last 5 years. The Daily Journal, on the other hand, has elected to maintain the company's position as its third largest stake. As of the 30th of September, it had a position in Alibaba equal to 300,000 shares, which was valued at $24 million at the time. Yet the recent decline in Alibaba's share price can provide some food for thought to investors who take an opposite stance. The sales of the Chinese technology business increased to $29.1 billion in the third quarter of 2022, representing a year-over-year increase of 3%. In spite of the effect on consumer demand by the COVID-19 comeback in China, as well as slower cross-border commerce due to growing transportation costs and foreign currency volatility, management observed that the firm was nevertheless able to achieve this top-line growth. Alibaba does not currently pay a dividend to its shareholders. Nevertheless, the company does return funds to shareholders via its stock repurchase program. As of the 16th of November in 2022, the corporation had completed the buyback of nearly $18 billion worth of its own shares under the terms of its previously established $25 billion share repurchase program. As we come to the end of this video, we hope that Charlie Munger's message has served as a wake-up call to us all. The future may be uncertain, but by staying informed, taking action, and being prepared for what lies ahead, we can weather the storm and emerge stronger. Whether it's diversifying your portfolio, building new skills, or being open to new opportunities, there are steps we can all take to prepare for the future. Thank you for watching, and please share this video to help spread awareness of the challenges we face and how we